Hi, I'm Jimmy. In this video, we're looking at Ulta Beauty, ticker symbol ULTA. So in this video, we're going to look at the basics of Ulta Beauty's business. Then we're going to jump into their recent earnings, followed by looking quickly at their financials. And then finally, we're going to try to come up with a fair value for Ulta's stock using discounted free cash flow to see if Ulta Beauty is worth buying today. Okay, now with that said, let's jump into the basics of Ulta Beauty's business. So Ulta Beauty, as of the most recent filing, has about 1,400 stores. In fact, if we jump over and look at a chart of Ulta Beauty's stores at the end of each period, well, we can see that over the past 20 or so years, they've done an impressively good job of increasing the number of stores that they have. Now, when I was looking at the recent quarters, it looked about they were opening between 10 to 15 new stores per quarter, give or take, and closing 1 or 2 stores each quarter as well. So they're doing a good job of adding good stores and trying to get rid of stores that in theory are underperforming. So with that in the back of our mind, well, now one of the important numbers that I think came out of my analysis of Ulta Beauty was that Ulta Beauty, about 95% of their sales came from members. That sounded like a really high number. So basically, a membership of Ulta Beauty, it's free. And Ulta Beauty, I still haven't said what they do, but they sell beauty products, as you might guess. Well, members, for every dollar that they spend at Ulta Beauty, they get kind of rewards, like you do like a rewards credit card, that type of thing. And with those rewards, you might get a free product or discounts. And it seems like a good membership in general to have since it doesn't cost anything. But overall, the fact that 95% of revenue, also known as sales and revenue are the same thing, the fact that 95% of sales is going to members implies a certain amount of member loyalty, which I think is a good sign for Ulta Beauty. Now, they sell a wide range of products, everything from what they call the mass market products that competitors might be something you might find at the local CVS or Walgreens or perhaps at a local supermarket, all the way to higher end products. Prestige products is what they call it. That might be something you might find at a high-end department store, that type of thing. So they have a wide range of competition, a wide range of products. Now, when we look at the industry in general, everything from what you might find in the supermarket to what you might find at the department stores or stores like Ulta Beauty or maybe a Sephora, well, the entire industry, according to IBISWorld is a research company that analyzes industries. They're very good at it. Well, they estimate in the most recent fiscal year, they estimate that the beauty products industry is about $180 billion. We'll see how Ulta Beauty stacks up to that in a moment. But for now, I just wanted to set the stage as to how big the industry actually is. Now, when we look at some of their competitors, one of their bigger competitors is Sephora. Sephora, again, offers a wide range of products, much like Ulta Beauty does, but their products tend to be a bit higher end. So where Ulta Beauty will give everything on from the lower cost to the higher prestige products, Sephora does a similar thing, but they focus more on not just prestige. They have a wide range as well, just a more expensive wide range. So we can keep that in the back of our mind. Now, Sephora has been able to make a dent in Ulta Beauty's growth a bit, specifically with their expansion into Kohl's stores. So, you know how different companies are kind of teaming up with other companies, and they put a miniature Sephora into Kohl's. Well, Ulta Beauty is doing the very same thing, except they're combining with Target. So they have, on average, about 1,000 square feet in a Target store, and they're in a bit over 500 Target stores right now, which again, I think is a good combination. I think the average customer for Target could also be a good customer for Ulta Beauty. I think it's a good crossover there. Now, I would point out that the 500 plus stores that we have in Target are not the same stores, with almost 1,500 stores that they have outside of it. They list those two numbers differently. So I wouldn't necessarily call it 2,000 locations, but again, this gives us additional growth. Now, one other growth point to consider, and then we'll jump in and look at the earnings, is that in 2025, Ulta Beauty is expecting to expand into Mexico. Now, they're calling this a low-cost expansion or a low-asset expansion, and that it seems like it's being done in a collaborative sense, but there is some potential growth expanding into other markets going forward, since the vast majority of their revenue is coming from the United States right now. That being said, let's jump in and look at some of their most recent earnings. So they recently came out with earnings, and they came out with earnings per share of $6.47 per share. Compare that to estimates of 625. So they beat estimates. When you look at revenue, they slightly beat estimates. They came in at 2.73. Compare that to 2.72. And then they have same store sales of about up 1.6% compared to estimates which estimated that they would come in at about up 1.5%. Now, same store sales for many retail companies are crucially important. And basically what it does is it looks at the growth of revenue in a particular store, in individual stores. So we already saw on a chart that Ulta Beauty is increasing the number of stores that they have. Well, that alone will increase their revenue. What about the individual stores? If you're just looking at the same store, does revenue increase there? Here we could see that, at least on a quarterly basis, it's increasing about 1.6%. So again, this is decent growth. Now, when we jump in and look at a chart of same store sales, which for retail companies is very important. Most retail companies will publish what same store sales numbers are. And that's an important number for us to consider if we are looking at retail companies and we want to truly find growth. We don't want to find a company that's just opening a ton of locations and growing revenue that way, but perhaps it's not revenue that individually is growing. That being said, when we look at the historical numbers for Ulta Beauty, well, going back to 2005, they've fairly consistently grown revenue in the single digit range. So somewhere between 5 and 10%, let's say. Now, there was a recent jump where same store sales jumped extra high, but that is it's real important to look at the year before that. And the year before that, well, clearly 2021 for them, fiscal year 2021 was a very bad year. But what if I told you that after the earnings came out, where they broadly speaking beat analyst estimates, the stock pulled back a bit? Well, that is primarily because on that same earnings call, management announced that they were reducing guidance going forward, going out the second half of their fiscal year, where they're reducing revenue guidance and same store sales growth. So because of that, the stock pulled back just a bit. Now, with that being said, let's jump in and look at some of their numbers. Now, over on our Investors Grow website, and by the way, this is our Investors Grow website where we're trying to make it easy to analyze stocks. We have all different types of charts and quick ways to value companies, everything from discounted cash flow to price to earnings, price to book value, ways to value banks. We do 3 private investing live streams per week. If you'd like to get access to all of that, I'll leave a link in the description below. We're really having a lot of fun over there and doing a lot of cool things. But besides that, all the charts that you see are going to be charts on the website if you'd like to get access to it. Link in the description below. But in the meantime, I'm going to zoom in here to make it a bit more readable. So we can see in this revenue chart, this company for the past 20 years, we've grown this out for 20 years. For the past 20 years, they have consistently and fairly steadily increased revenue. The only real deviation from that steady growth happened in what they call fiscal year 2021. But I would point out down here, right below the chart, we could see it says fiscal year ending in January of 2024, which means the last year that ended for them was 2024. Now you might ask, we're in 2024 right now. How have they already finished it? Well, their fiscal year ends in January, as they're pointing out. So what we are seeing as fiscal year 2021 ended in January of 2021. So it went from February 1st, 2020 to January 31st, 2021. That's fiscal year 2021. They already finished 2024. They're now in fiscal year 2025. And when we jump over to net income, they look exactly the same. Sure, the number is a bit lower here, but overall, Ulta Beauty is growing at an impressive clip. So I have no issue with the way that they're growing. Okay, now let's jump in and look a bit at their margins. So looking at net profit margins, this is how much profit they make. So for every $100 of earnings, how many dollars do they earn? We can see that the highest number here is 12.2. So they earn $12.20 for every $100 of revenue that they generate. That's what net profit margins is. These numbers are in percentage. Well, we can see that over the past 20 years, they've gradually increased their net profit margins. To put this in perspective, we recently did a video on Amazon where we were looking at Amazon, and Amazon was in low single-digit numbers. And they're now trying to push up to double-digit numbers. I just thought it was interesting that Ulta Beauty is kind of leading them on that. Now, if we were to look at a company like a Walmart, well, Walmart is showing net profit margins 2, 3, 4%. Ulta Beauty is doing significantly better than that. So these are all positive signs when we look at their numbers. Okay, now we skip over to operating cash flow. Now, operating cash flow, much like revenue, much like net income, has been steadily increasing for the past 10 years. And when we jump over to 20 years, the trend continues. So again, overall, this is looking fairly good. Now, how about capital expenditures? So capital expenditures is an expense for the company, and we can see that this number has also drifted higher over the past 20 or so years. Now, I saw an interesting article where they were talking about the recent explosion in capital expenditures for Ulta Beauty, and they kind of made it sound like it was a negative thing. And basically, they're pointing out the fact that you're coming off the 152 and it got over 400. They said it nearly tripled. Actually, they said it more than doubled. But still, that's one of the things I like about this website, but also looking at data on a longer term perspective. Yes, clearly the numbers have had an enormous jump coming off of 2021, which we know was COVID. So fine, a lot of things were closed down. But bigger picture, I think it's much easier to see what the trend is. Now, numbers have gone up, but I would expect them to. We already talked about the fact that they're opening 10 to 15 new stores each quarter. That's going to take a certain amount of capital expenditures. That's investments that they have to make in their buildings, in their properties, in upgrades, things along those lines. So I would be more nervous if this number wasn't going higher. But the real question is, how does it lead to free cash flow? Because don't forget, we already looked at cash from operations. You then deduct capital expenditures, and that'll give us free cash flow. So this is a chart of free cash flow. Now, this chart includes historical numbers, which are the dark blue numbers. Then the green numbers are analyst estimates. We have 3 years of analyst estimates. And then we did some computer estimates, which include the 3 years after that. That's the light blue numbers. And basically what we did is we took the most recent number for analyst estimates, started with a growth rate of 20%, which is below their 5, 10, and 20-year average for free cash flow. And we gradually decrease it. So if you were to do the math for the individual numbers, you'll see that free cash flow growth gradually declines, getting us closer to our perpetual growth rate of 2.5%. Well, now we're going to use these numbers and stick it in our discounted cash flow calculator to come up with what the fair value for Ulta Beauty stock could be. So with those analyst estimates and our computer estimates for free cash flow going out the next 6 years, well, we could see the fair value for Ulta Beauty stock comes out to be about $445 per share. Right now, the stock's trading at about $382. So right now, it looks like this stock has about a 14% margin of safety. Now, in the last video I did, somebody had asked me if we account for the potential dilution for shares for the fair value of the different companies we analyze. And I just wanted to point out that on this table, we can see that there is a column that calculates the fair value before we account for debt and cash. This calculation for 445 is after debt and cash. This company has about $30 in net debt. So debt minus cash, how much is remaining? About $30 per share. We deduct that from the fair value of 475. That's how we get to the 445. But you might notice that we also have a column that gives us the calculated diluted fair value. So if you were looking at a company and they had lots of, let's say, employee stock options and you want to see the fair value there, it's right here for all the companies. We are showing a diluted fair value for Ulta Beauty stock of about $439 per share versus $445. So you can knock about $6 per share if the stock were to become fully diluted as of what they have out there today. Now, I actually hesitate to use that number, and it really depends on a situational basis. A lot of people think that you should always use the employee stock options and you should use the diluted numbers. And it will give you a more conservative number. So in many instances, I'm okay with that. But what about the fact that this company and many companies are buying back shares? So over in the financial section of the website, well, we have a chart for both weighted average shares on an annual basis. What was the weighted average number of shares that that company had during that time period? Both on a weighted average and a diluted weighted average period. And we can see that over the past decade, the number has gradually drifted lower. So if we're going to look at the fair value, we're going to say we should only use the diluted number. Well, do we also account for the fact that they do have a buyback program And if history is any indication, they might continue to buy back to avoid a lot of that noise, unless it's something real egregious where the company is issuing a ton of shares and it has a ton of employee stock options. Unless that's there, I usually just make note of it, but then not necessarily try to adjust the calculations for it. That brings us to the margin of safety that we want to use. So going back to the fair value calculation, we can see that the current margin of safety based on the current price and the current fair value, according to this calculation, the margin of safety is about 14%. So what margin of safety is most appropriate for this company? Now, what I do on a personal basis, and I talk a lot about this on the live streams that we do with the investing community, what I try to do is I try to do my research, and then based on the risk of the individual companies, based on that research, I then assign a margin of safety to that company. For example, when I owned shares of Apple, well, my analysis of Apple back then implied that there was a lot less risk than there is in a company like Intel, which I also own, but let's call a spade a spade. Intel, Alibaba, those companies deserve a higher margin of safety than a company like an Apple or a Microsoft do. So I try, before I come up with a fair value, before I look anything at this, I know I'm doing it now while it's showing the chart, but I try to come up with, well, okay, what would my margin of safety be based on the numbers? Not the fair value, but the numbers. And based on the numbers, based on the growth, based on the reliability of management and what they've done, I am super impressed with Ulta Beauty. And coincidentally, I actually came up with a margin of safety of about 15%. Now, just so we're clear, I generally, 5% is the absolute lowest I'm willing to go with. And then I try to add margin of safety, like I try to increase it like 25%, 20, 15, numbers like that. I usually don't say, oh, I want a 14% margin. That's a bit specific. I just round a bit. I came up in my head about 15%. Now, this company was actually a company we researched in the investing community on our research live stream. And at the time, it was actually right at 15%. And I told them, and I want to say it now because I have this self-imposed rule that I will not buy a stock unless I first announce it in a video. Based on my analysis, I like Ulta Beauty. Based on my portfolio, I'll do a video on my portfolio soon, but based on my portfolio, I could use a good retail stock. I think this is a solid retail stock trading at a real good price. If we're curious to see the fair value of this company outside of discounted cash flow, maybe you don't necessarily want to use analyst estimates and we want to value it a different way. So now when we jump over to the multiples section of our website, well, this is price to earnings. This is the PE multiple. Now, one of the things that actually drives me crazy with a lot of companies, and it kind of happens sometimes, especially around, let's say, things like the coronavirus. But I look at this chart and let's call a spade a spade. That chart is nearly unusable because there was a single quarter where earnings dropped real low. And because it dropped real low, well, the price to earnings multiple went sky high, kind of throwing the rest of the numbers off. You could barely see the little numbers because the y-axis has to scale accordingly. So one of the features that we added to the website was that you could click on the individual data point and remove that data point from the display. So it rescales it. So now you can see the way it looks. And now we can see that the most recent numbers for price to earnings look very undervalued. Right now, the PE multiples is sitting at 14.6. And when we compare that to their own averages, so when we scooch this table over a bit to make it a bit more readable, what we can see here that we have the PE multiple, and it uses the company's own 5, 10, 20-year averages, and then overall, just in case there's more data going back further. Well, we can see, according to the most conservative numbers here, which is their 5-year average, well, their 5-year average multiple is 19x. Right now, the stock's trading at a bit, or right around 14 or 15x. So clearly that's undervalued. The implied fair value using the 5-year average is about $498. Again, the stock is currently trading at about $382. To me, I like the double confirmation, which explains why I plan on adding Ulta Beauty to my portfolio. Now, I do want to wait for the margin of safety to get to at least that 15% level, but either way, if it gets there tomorrow, I'm going to wait at least 3 days before I jump in and buy this. That way, everybody has their time to do their own research. Now, if you are doing research on this company and you find any holes in the analysis, or you find any potential things that we haven't considered, please let me know in the comments below. And If you're watching this video and you're interested in this company, read the comments, see what information there is out there, and try to do as much of a deep dive as you can before you jump in and buy any stock. Now, if you'd like to learn how to analyze companies, I did a YouTube video called 8 Steps to Analyze a Stock. But like I said, if you want to get access to the website where we can value stocks together and do different live streams together, if you'd like to get access to that, link in the description below. Let me know what you think on this. Thank you so much for sticking with me all the way to the end of the video. I really do appreciate it. Thank you, and I'll see you in the next video.